Hey, currency kings and queens, we are back with another video and we're analyzing our futures. Let's get right into it. So, this week was kind of a newsy week. We had news as well as a federal holiday on the 19th. So, I'm not real good with the days of the week that a lot of stuff falls on because my schedule is very different than most. But we're going to get right into futures. I'm going to start with gold on the daily time frame. So let's go over gold, everybody. Looking at this chart, what can you tell me about gold? If you're just coming in, I don't know what level of trading you're in, but if you're just looking at this daily chart, what can you tell me about gold? Trying to take the tag off. The market's closed, so we don't have to worry about any of that stuff. But just, I'm going to take the volume off because we have no volume. It is the weekend. So if we're just looking at gold, we can see that it is in an uptrend. So here, higher highs and higher lows. And this is a higher high from the previous high. This is a swing high. This is what we call swing highs. And then if we look here, this is a higher high from that previous high. So that's considered an uptrend in trading. If you have higher highs, every time the candle closes and does a swing high, if it's higher than the previous closed candle, that was the swing high prior to that, then we are going to deem that an uptrend. So the market is buying on the long term, and this is on the daily time frame. Just keep that in mind. So we already have our daily bias on gold, which is up. When we drop down to the lower time frames, we could see a little bit more detail because that's kind of why we look at the big picture and then we zoom down to the smaller time frame so that we can see what it's doing on a more detailed level. If you drop way down to like the 1 or the 5 minute, you're going to see a lot more details. So I typically like to, and some of those details can be can give you very good information, and then some of the details create a lot of noise. So you don't want a whole lot of noise on your charts, which is why I typically trade on the 30 minute. So we're going back down to the 4 hour. Back up to the 4 hour, and we can see these swing highs that we had previously circled. As you can see, the structure here, it's pretty decent structure with some consolidated areas and then some push-ups, and this is what the market is supposed to do. This is a normal trending market behavior. So with gold, when I'm looking for sales and you see your lower lows, your lower highs and lower lows, it's trending down. It didn't make any previous highs. So are we thinking this is a retracement? Because remember, we said we're on an uptrend on the daily. So we need to define and be able to read the lower time frames so that we know, one, you want to know your strategy and follow it. 2, you need to know market structure in order to see what phases or what structure the market is displaying at the time that you are trying to trade. If you know that, then trading will be easy for you. You'll adapt. You just need time in the market so that you can see your trades play out and know what it looks like. And there's different forms of the same types of trades. Say you trade supply and demand. Say you trade breakout. Say you trade using the Fibonacci or the moving averages or things like that. You still need to know market structure because even with just the indicators, we all know they lag. So we are already behind once we're using those indicators. But if you can read price action and market structure, that is where your bread and butter is. So make sure you're spending time back testing and on the charts. As we can see here on the 30-minute time frame, we have a double bottom. So it's been trading on the 30-minute down to probably a retracement. But once we got to this area here, we have a double bottom. So we want to pay close attention to the double bottom because it'll rebound from that double bottom if it hit twice like it did. And we had some volume in the market, so it pushed up and started consolidating. And this is kind of where we were all left out at the end of this week, was the consolidation phase. We were looking for this to either respect this area or break out from this area. So I drew a zone. Trading in zones is amazing if you've not done that before. So it leaves you a range to trade in so that you can look and see if you break out, trade. If you trade breakouts, you can see if it breaks above this range here, we're going to continue with an uptrend. You can see if it breaks below this area, you're going to continue. Are we going to, expect whether it's filling this fair value gap or reversing, which it breaks below this area, if I would consider it something like this. Or on a bigger time frame, it could just be retracing deeper because there's all these levels down here. So reading market structure is very fundamental. Whether you trade futures, stocks, crypto, it's all relative to knowing your market structure and your price action. What is it doing? How to read these candles as they're forming, and when they close, know how a close of a candle can be rewarding if that candle looks a certain way or has a certain amount of volume, or the body of it is structured a certain way. So you have to be able to read that. You can get by on a whim with a few lucky trades, but long term, if you want to be able to sustain being a trader, you need to know market structure and price action. So one of the main books that I'll recommend for you is the Candlestick Bible. It was fundamental for me when I read that because it's going to give you the baselines, the groundwork for candlesticks, and it just sets you up for you to begin trading and to dig more. In trading, you have to be dynamic. You have to learn how to do your own research. You have to look into things. You have to test out strategies. Testing a strategy for a week or a month is not going to get it, y'all. You need to have enough data so that you can get a good idea of how you're doing with the strategy that you've created for yourself or that you seem to follow from others, which is some of the more popular strategies that a lot of us traders use. So Friday on gold, we did the consolidation. We just ranged. So next week, hopefully we get some news that'll put some more volume in the market and push it in one direction or the next. I am always going to be biased towards whatever the trend is currently until it breaks out and retest to let me know that there's a reversal. So gold, it's not looking too bad, but when you get in next week, just remember a lot of times pre-market it'll start cleaning up some of the things that need to clean up. It'll be wiping out liquidity. It'll fill fair value gaps and stuff like that. So if you're a pre-market trader or you tend to see a lot of your setups in pre-market, just be really, really careful getting in and staying in. I'd like to be out of a trade by the time the market opens. Sometimes there's a big enough trade on a higher time frame that I'll take. And if there's no crazy news or if the day is not like too crazy with releases and stuff going on, I'll kind of try to stay in there and monitor it. But I like to be out when the market opens. So a lot of you pre-market traders are trading from the previous session and not quite done with your play out for your trade. Just be really mindful of that. Other than that, gold set up pretty good for us next week. what's to come. So we all have a plan for gold that it's going to either break out from the current range that it's at or continue on the upside. So we all love it. And then if you look at this on the 15, it appears that it could have been like a triple bottom instead of a double bottom. So it may have some room to go up. And let's just look at our highs while we're talking about this. What kind of highs have we had, y'all? Like yearly highs. Let's see. So this is the highest that gold has ever been, and we're approaching 3,500. So let's be mindful of that. Now, I'm not saying one way or the other to make your bias or change it for whatever reason, but just be mindful that we're approaching 3,500 in gold. So that's phenomenal. So yeah, be careful next week on gold. Gold is really set up real nice. You just gotta you'll be really patient and wait for your setup to play out before you hop in with some confirmation, hopefully. Another thing that I like to stress is 3 reasons why. 3 reasons why I'm going to take this trade before you hop in. And hopefully we're planning our trades out before we get in. We know our stop loss level. We know our take profit levels. And we know when we're going to get in and when we're going to take profit. And we're not adjusting those while the trade's in. Once you're in the trade and you have your parameters set, leave it. So let's start practicing discipline on that and wait for gold to play out and give us our coins, honey. We need our coins. But that's all I have on gold, and we're going to look at NAS. So NAS is pretty much doing the same thing. It's consolidating, it's reached a level of resistance. Let's see where we are with NAS. NASDAQ is at a high as well. 22, I think we went up as high as 22,391 over here in this area. 22,428. I mean, we reach the 22,400s back over here with the spike. That looks like it could have been news. But we have contracts, and then yesterday was triple witching. A lot of contracts were expiring, and I was assuming there was going to be some potential buying in the selling in the market, or some other stuff going on. But yesterday just didn't really give a whole lot. When the market opened, we had a little bit of volume. We had some volume enough to push for about a couple hours, and then it just kind of faded off and just did a little ranging thing for the rest of yesterday. So if you can see down here on the 15-minute time frame with that ranging, I meant ranging, but we have some fair value gaps that was created. Let's get our bias on our higher time frame. We're still on an uptrend because look at this movement here. And then right here at this resistance, it stopped. It respected. So dropping down to the 4-hour, it did not create a higher high. We have a fair value gap up there that it attempted to grab. I think if we look at it, it did grab it. It grabbed it and took that out. But we're creating other fair value gaps. Say that 3 times real fast. We created other fair value gaps, and as the market continues to move, it still continues to create. So if on the 1 hour we can see that it was filling some of that gap, so there's still some more room to fill the portion here that is still considered an imbalance, but we are still on an uptrend that's currently retracing. So there's also a demand zone here below the fair value gap. And it's a pretty good range. I would typically draw it all the way here. So that's a demand zone that it could potentially go down and tap into. What I would like to see on the 30-minute time frame is this area right here. I would take sales anywhere below here. I would take sales anywhere below here because remember, in this range we have room to fill these gaps and see if the demand zone is going to be tapped into and push back up. And take profit will be somewhere in here. And you can have different levels of take profit, which is really good. And I like the way that NAS kind of moves. So that's kind of where I'm at here. This is a pretty strong area of support due to it touching down 3 times and pushing up strongly. So let's just be mindful that there's a lot of potential on NAS next week coming in. So there is a fair value gap indicator that I'm using that I like a lot, and it is right here, FVG by Nephew Sam. It's on TradingView. But yeah, this is really some eye-opening setups for next week. I look forward to the week. I'm actually kind of excited. As far as the news coming out for next week, let's see. So we are 21st. So it'll be the 23rd on Monday. Let's see what we got for news on Monday. Whoa. Okay, y'all. So this is Monday's news. Hold on. Let me make it big. And then I can just... Okay, so this is Monday's news. I didn't even look at that. We should have been looking at that way before we did the analysis. But, hey, that just means there's more volume. You just got to be careful. And the news that's really going to matter for us is the PMI on the USD. And then they have some FOMC that's 2 a.m. That's tentative. So, yeah, we got some red folders on Monday. Choose whether or not you're going to trade that. But I've given you some tools and some insight on NAS and gold futures. So if you dare to trade on Monday, just make it great. Remember, I said continue with your planning pre-trade. And then once you're planning pre-trade, execute that trade with those parameters set and hands off. Don't touch it. Let's practice that. I think that'll be a good skill set for us to kind of get used to doing. But that's pretty much all I have for y'all. Thank you for tuning in, and until